Dana Solberg from Churchill Mortgage shares her wisdom on building successful construction loan programs, setting clear expectations, and the absolute importance of fast draw turn times and builder relationships. If you want growth strategies and real talk about modern construction lending, this episode's a masterclass in running successful, scalable programs.
There is a lot of risk with construction. There's a lot of unknown. You're agreeing to lend a ton of money on something that doesn't exist yet. I want to prove my value to these builders and show them why doing this task is both good for me and them. I get the best parts of construction. I get the very beginning when everyone's really excited, and I get the very end when everyone's moving in.
I'd like to welcome everybody to the Construction Lending Podcast. I'm your host, Sean Ferris with Land Gorilla. We have a really great, exciting guest for you today. We have Dana Solberg from Churchill Mortgage. Welcome to the podcast, Dana.
Thank you so much for having me.
And for everybody that doesn't know, Dana is the Director of Construction Finance at Churchill Mortgage. And we've had quite the conversation offline, and I've got to know her quite a bit better, which will make for a fun and exciting podcast. But one of the things, Dana, that we've talked about is your origin story. You know, how do you, nobody ever wakes up and says, hey, I want to get into construction lending. It sounds fun and excited. Nobody, you know, you go to a career fair in high school or college, you know, unless you're my kid will probably be the first one that does something like that. But
It's ready.
I think our audience, you know, would love to hear, you know, how did you get into this?
I got into it through medical. That makes sense, right? Medical to construction. I went to college for 9 years. It's been a joke that lots of people go to college for 9 years. They're called doctors. I am not a doctor. So I started in pharmacy. I grew up with parents that both had autoimmune diseases. So I was like, drugs are how people live. I am going to deliver them to the masses. I did that for 3 years at the University of Montana and kind of wasn't feeling it. It wasn't for me. I'm going to switch to nursing at that point. So I was on the nursing track. I had actually switched schools and was going to Salish Kootenai College in Pablo, Montana. So that was a unique experience. And while they were doing the nursing program, they required me to do an arts program, an arts class. And my art class of choice was welding.
Wait, hold on. Only in Montana, welding falls under arts.
Right.
Yeah, I would have been in the arts program here.
No, it was perfect. I did a ton of welding yard sculptures for my mom that are still in her yard today. Lots of cactuses and coyotes because that's her vibe.
Very cool.
Yes.
Very cool.
So I ended up being really good at welding. Like my instructor was this awesome old guy that he said women were better at welding anyway. Historically, we have a steadier hand. So there was that. I got my welding certificate. While getting my welding certificate, I realized I was working nights doing CNA, getting ready for my nursing degree, and was like, I don't know if I want to be a nurse anymore. So I was almost done with nursing and didn't think I wanted to be a nurse anymore. Was like, let's go towards the admin. I like the office work. I like the organization. I like that stuff. So I ended up finishing my degree in healthcare administration, and I was looking for a job at a doctor's office, found a job as a bank teller. That was what was available. So that was really my in to the financial industry, was bank tellering.
Bank tellery with a drive-through.
With the drive-through. I was the drive-through queen of Flathead Bank in Big Fork, Montana. It no longer exists, but it used to sit at our one stoplight, because there's one stoplight in this town. There's two now. But at our one stoplight overlooking Flathead Lake, it is the largest lake, freshwater lake west of the Mississippi. So it's an expanse.
Yeah.
And it was the most glorious view. I enjoyed that view for about 6 months as a teller, and I got pretty bored pretty quick. They could tell I wanted more. So they, advanced me to the loan department, which also meant dropping my gorgeous lake view to a basement that had no windows.
That's typical.
Right?
Yep.
You got to keep them down in the basement. I spent a couple years in that basement working all things loans.
Paper files in the basement too.
Paper files. There were at least a dozen, like the 4-stack with the big pull-out drawers. Every single morning I'd have to run through and unlock them. They all had different keys. I had every single one memorized. There was a paper vault that you had to really like punch the code in and like get it good and then turn the big thing. It was all the things paper.
See, I was the guy that had to unload the pallets that would get dropped off of all the paper and
Oh
then
God.
take them throughout the building to make sure everybody had paper backups. That was I distinctly remember doing that for my dad just way too many times.
A lot of
Way too
muscle
many times. Oh yeah.
back then.
I had a dolly. Where does construction lending even come into this?
Construction lending was a little bit later down. I had started with the consumer car loans and the CD backed loans, just to build consumer credit and kind of got the basis there. I did some ag loans. Montana's obviously big on agriculture. So we were taking cattle as collateral or taking crops as collateral. Those switched to commercial loans. We kind of got into those. In the midst of the commercial world, the bank was like, let's portfolio construction. Let's get into this. They started getting into it. And I was kind of their girl that was willing to try everything. So I've tried all the other things.
And when we say construction, are these consumer like C to P loans, a little bit commercial, a little bit of both?
They are strictly consumer when we're first getting started. We are just doing consumer C2P, the most basic vanilla of construction loans. Like there is no hair to this thing. It is a very like, here is your loan. Have a nice day.
Give me the construction contract and sign here.
Yes. And I'm thinking about all the funny things we did. We did the QuickBooks. We did every single invoice submitted, every single payee, supplier, subcontractor. I cut you a check. I got you a lien waiver signed right in front of me. It was all the down and dirty work on every single spreadsheet amongst every department.
Full voucher system. Like you turn in the bill and we write the check to that subcontractor or supplier. Yeah, that's a lot of work.
It is a lot of
work.
And that was where like construction, my love, I guess, like kind of started to grow. And I think it was because I was nosy. I loved looking at blueprints. I loved looking at house plans. I want to know every little detail. I want to know why you did that instead of this. And
yeah, did you get out of the basement?
I eventually did get out of the basement when the bank closed. Well, they didn't close, they sold to a bigger bank, but I got out of the basement at that point.
There's nothing more enjoyable than getting an inspection report. The first, inspection reports, yeah, it's great. We see the slab, but as the thing starts to materialize and start seeing the kitchen go in and the bathroom and a pool, like some of those inspections are just truly beautiful,
Yeah. It becomes so real. It's like when you see time lapse of something being built, I think of like big commercial structures that they'll do a time lapse video on. It's like the inspection is like stop motion time lapse for me. It's one of my favorite parts of construction lending. I love seeing it go up.
That's what we should do for borrowers is they get to the end of their project, they're moving in and they get an email, and in that email it's like, hey, click here, and it just does this full time lapse beginning to end of their home
inspection.
That would be such a cool gift to
100%.
Right? I would like it. You would like
show it to all my friends as a borrower.
I think we're onto something. I think we're onto something. I'm gonna go file a patent.
I like it.
Very cool. Very, very cool. So it takes off. You guys get acquired and they continue with construction lending. It gets bigger and better.
They do continue with construction lending. At that point in time, I decided, let's have a baby with my husband. So we did that. And I think at that point, I was like, I'm going to pause and be with my kid. I did that for 6 months. He is a joy. He still is a joy. It drove me insane. I need to work. Like, I cannot be just at home. Now I work from home, so I am just at home all the time. But, I got with another local bank pretty quickly after all that and was doing just commercial lending there. And then I had a local mortgage company reach out and they were thinking about setting up a construction program. I thought I like construction. It's been a minute though, but I think I could fake it till I make it and help them set this up.
Was it difficult transitioning from bank mentality to mortgage mentality?
I went from being able to do whatever I wanted to not being able to do whatever I wanted to being able to do what I was told by a warehouse bank. No.
And it seems like it would be in reverse. Like, hey, I'm going to a more highly
Right.
regulated bank, right? Who has regulators coming from every corner, right? On how you should do things, to the opposite, where we have warehouse banks. Yeah, it's not really our money. It's, we have to abide by
Yeah.
these rules, and there's program guidelines, investor guidelines. And it's like, whoa, hold on. I just want to make a draw. Like, this,
Right.
why is it got to be more complicated?
Yeah. That was probably the biggest, I guess, culture shock from finance bank to finance mortgage company. It just gave me another level though of, like when you do a Sudoku puzzle and they only start you with one number. Working at a bank is like, and doing construction is like getting to start with 5 numbers.
That is a killer analogy, by the way.
Right.
Yeah, that's a great one.
So I like the challenge and I like the challenges that the warehouse banks, they're like bittersweet. They obviously give me the money I need to fund these loans and they get to set the rules. And I like achieving that. I like making people happy, whether it's
they're
the
all
warehouse
different.
or the builder or the borrower.
Yeah, warehouse banks are so I mean, talk about a dramatic contrast from the way one does business to the way the other does
Mhm.
business. Definitely a transition.
Yeah.
And then what?
Then I spent 4 years setting up a construction program at this local mortgage company in Kalispell. It went great. It was right in the middle of like, not in the middle. I started pre-COVID and then the
Mhm.
COVID boom happened. So really, I set that construction program up at like the killer time. Rates were dropping, everyone was doing all the things, renovations were happening left and right. Everybody wanted these low rates and then some.
Let's talk about that, because I have a very interesting perspective, and what it
Okay.
sounds like is like, hey, it got really good. Was there any pressure, during that time as rates started to get lower and lower and lower and lower? Was there any like, hey, let's pause construction? Data, you should be doing refis right now because you could do 10 of those to, a couple construction loans. Like, was there pressure to kind of pause construction and just focus on getting as
The
much
refi
refi
revenue.
through the pipe?
There was never that pressure.
You
At
got
that
lucky.
time, it was like, we're full steam ahead. You tell me when you need more help, Dana.
So beautiful.
And
Not
we
not
were just
everybody was that
chugging.
lucky.
Right?
No,
I
it
definitely
was.
had the opportunity to push where I could push anywhere. I didn't have to tunnel it.
Yeah, we saw full programs get completely dismantled. People with tons of construction experience going, "Yep, they're pausing construction fully so I could go process." They want me to underwrite and process, refis because there's so many of them and we don't have the capacity. And I was like, "Oh, that's kind of a bummer, but it'd be great to do construction loans right now." You got
No,
lucky. You really got lucky.
we definitely trudged through all things construction, and I was there through 2022. At that point in time, they were still full steam construction. I want to say I left with just shy of 400 active projects on the books. So it was a big operation when I took off. Churchill
Wow.
contacted me at that point. It was a sales guy from Churchill said, we keep talking to these builders. They don't want to work with us. They only want to work with this other lender. What are you doing? Do you want to work for us? And at that point in time, I was like, this is very flattering. No, I don't want to work for you, but I'm happy to talk with you about the industry and about like what I'm doing. There is enough pie for everybody to have a slice here. Like, I'm not going to withhold the knowledge. So I like happily talked with these Churchill guys for an hour or so, left the meeting being like, very cool guys. Hope they do well. A month later, one of the guys messaged me again and was like, "Are you sure? Are you sure you don't want to just come see what we're like?" And I mean, at that point in my life, my boss at my current job had just left. He had found a new opportunity, and I loved him. I was really tied to him and his leadership. And so it felt like a good point with that last lender to be like, I'm ready to jump. He jumped. I'm going to go find something new too. So I took a plane ride out to Nashville with my best friend Taylor, and we sussed out Churchill. We felt if it was a good fit, and it sure enough was.
Amongst hanging out in Nashville, which is pretty cool to
Right.
begin
Like
with.
that was what I thought. Like, worst case scenario, I hate Churchill. I just got to go to Nashville for the first time.
But, judging by your background image right now and where you're at, it must have gone pretty dang well.
It went exceptional. Everyone I met there was just amazing. And what they were offering me was something that most adults don't get. Churchill was offering me a do-over. I was getting the chance to set up a construction program again. After having just done it for the last 4 years, I knew all of the spots that I slipped, all of the places I had pitfalls at the last place, where I had hiccups, where I found streamlined processes that took me a while to get there. I was able to do it all over again here. And it was awesome.
And what origination platform did you go from to where you guys are at today? And I think I know the answer to this question, but
I went Encompass to Encompass, so I did not have any hiccups on origination platforms. I have danced with other platforms. I've done Calyx, Point, and
who has not done Point? Who did not
right.
grow up doing Point?
I've done Laser Pro. I got pretty good
Okay.
at that. So I've definitely got pretty good at a couple, but I will say that thankfully it was Encompass to Encompass at this last one.
Oh, that's great. So you knew where the bodies were buried and how to single disclosure, dual disclosure, how to handle MI, and you knew how to get it from point A to point B for construction successfully.
Absolutely. And it made me look so good for so long, Sean. I mean, I still feel like at Churchill I look pretty good, like I do a pretty good job, but I was able to really like jazz hands wow some people pretty early on with the stuff that I knew, just because I'd had that history, which felt really good and really flattering to be like, look at all this cool stuff, guys.
First Sudoku, now jazz hands. This
Now
is I think
jazz
people are
hands.
getting really good imagery out of this podcast. That is awesome, and Churchill has such a fantastic reputation in the industry, as well. So this just, must have been really exciting to work with a talented team that was going in the same direction. And was the mortgage company you were coming from, was that single state, and then you were going to multi-state with Churchill because it bigger footprint, bigger company, right? Is that
Right, absolutely. The one I came from, I want to say they were in 13 states,
okay?
mostly West Coast. They had like some hit or miss on the East Coast that I had messed around with before, but for predominantly, I was like a Montana, Washington, Idaho, Oregon girl. Like I knew those state laws, I knew most of the counties. I felt really good about them. So then I get to Churchill, and Texas slaps you in the face big and bad with all their rules, and Michigan's like, here's some new forms, try those out. So that's definitely where it threw me coming to Churchill, was all the new state rules.
Yeah, I wanted Texas is more of a gut punch than a slap in the face. I mean, that's
Right? All
uh,
the things.
we got a couple good webinars on that one, and I mean, you just talk about Texas all day because they touch every part of the journey before they close with things you got to have signed,
At
construction
close.
contract, and the attorney that's got to do assignment of the construction contract and the complexities with state law, and contract law and homesteads, and holding back 10% either at each draw, 10% of the draw amount, or you have to hold back 10% at the end. Every part of that journey, Texas is involved in, and
And it's all notarized just to make it extra.
yeah, no, at least lien waivers no longer have to be notarized.
Right.
That's God, what was it? And I know the governor of Texas, Abbott, for that one particular reason, he changed the lien law. And I was like, okay, hey, you're good
I
in my
like you
book.
guys.
I, throw the politics out. You change the lien law and notarization, a lien waiver. You're a pretty cool dude.
We're good.
Yeah, we're good. So you get going, and what was the beginning like?
The beginning was pretty easy at first. We had a pretty limited program. We were just doing conventional one-time close here. So I was really able to manage those pretty successfully. They had already been rolling construction for about a year and a half, 2 years with the products girl, Courtney, who was doing an awesome job. But her job was obviously like licensing and all other things, not construction. So they brought me on to kind of be that construction person, and they allowed me to flex. They allowed me to show off. My boss did make the room for me to grow here and grow the program to where I could open up the 2-time jumbo, or we could do the VA or the FHA.
So there's some program in place. How did you assess the situation?
Right. Talk about stepping on toes. I felt a little bad the first day, and Courtney, bless her, was like, you're not going to hurt my feelings. I don't know what I'm doing explicitly. So anything you do will be better. So I was really able to just take everything that she'd kind of put together. I print stuff. If I want to really sit with information, I print it. I have highlighters. Like, I'm big on colors. I want to go through this data with my hands because that makes it real to me. So I sat there, every policy and procedure, every guideline, every training thing that they had in place, I went through. That was my job maybe for the first week. And then I just piece by piece started picking it apart and rebuilding it.
And how did you talk to a lot of the originators? If I put myself in those shoes, like, what's working, what's not working?
I went to sales first, and really it was such a new product at Churchill. There was probably like 4 people that had used it from the loan officer perspective. And one of them was the consistent user. So she was my first stop to be like, what are we doing wrong? What are we doing right? Where can I change this? The next place I went to was some builders that we had worked with here at Churchill. What are you guys experiencing? What can we do different? And really, that's builders and sales. Obviously, I want the borrower's perspective. They're my customer. They're Churchill's customer. But from a construction standpoint, the builder is also my customer. And so is sales, an internal customer. And those were really important perspectives for me. So we definitely dug into what they'd experienced previously to see how we could change it and make it better.
What was working? What was not working?
Not working was timelines. Builders were frustrated with draw timelines. And once I really shook that down, it all boiled down to like people not knowing when the ball was passed to them. Like, they didn't realize that they had the ball at their feet and are supposed to be throwing it on to the next spot.
Expectation setting.
Exactly.
And that was a big, we talk about that one a lot. It's a pretty common theme of set those expectations as early as possible, and things just get a lot smoother.
Yep. I used to joke with an old boss that I had that I could do anything miserable as long as you tell me when it's going to end. So if you told me I have to sit next to this kind of annoying coworker for the next 2 years, and that then they would move or I would move, I could do it for 2 years. It would be the not knowing when it ends that I couldn't do. So that's where the expectations are so important to me.
It's so funny you say that, because I had a very similar experience, but mine was running line drills, playing basketball in high school. Sean, you're sandbagging. Well, I don't know when it's going to end. I don't know when it's going to end. I'm reserving my energy as much as I can because I don't know what's going to end.
I don't know.
Say, oh, we're going to do 10 of these. It's like, boom. Okay. Yeah, I'm in the game.
That's where the expectations come into play, though. Because it's like, obviously, we know everything's going to end, but I'm going to tell you how it's going to end. I'm going to tell you, the borrower, or you, the builder, how this flow is going to go. And if you tell them early and tell them often, early and often with expectations, I think that's where you get the best experience. And
For sure.
a lot of times it is just a reminder, like, hey, remember when we talked about this? And here's this document that supported that. Oh, yeah. Okay, carry on.
It's like a good Sherpa, component to it. Like, somebody's got a guide. They don't got to tell them how to do it, right? They just, hey, here's what to expect. next,
when
and
you get there.
and what you're going to need to do. It's
Right.
coming. It's going to be tough.
We'll
Gather
get
these things, and here's what happens if you don't.
Well, that's why the job title's like construction admin slash therapist. You are the marriage therapist, the builder borrower relationship therapist. You are all things guiding this along.
Yeah. And it's interesting because the amount of people that just want to talk to somebody, you talk about just wanting to talk to somebody with a mortgage, probably doesn't get more profound than a construction loan. And it's not that they have, you know, they just really need somebody to talk to vent. Like, yeah, my contractor's not this, or the borrower's not signing this. It's like, man, I got 100 other things I got to be doing right now. And I'm just biting my tongue to let you get it all out. But it's funny how that works. What advice would you give to somebody else that's, starting a new program right about this time? Hey, we're trying to get the whole thing up and running.
You need a person to be your point person, to be all things construction. You need a Dana.
Thoroughly agree. Right. This is a construction loan program. It's not like other programs where you can just add the policies and the guidelines and some how-tos and support documentation and do some training. They don't run themselves. Right. You have to have a person there that I would say is first and foremost passionate about it. Otherwise, you're going to go. I'll tell you right now, you're dead on arrival. You're not going anywhere if you don't have that person. And I've seen it a million times. You cannot just add a loan program. You have to have somebody there driving it. Any other advice you'd give them?
You need a driver and you need a bus. And that bus is some platform. Langorilla.
Thank you for the shameless
Yes,
plug.
you do. You need the system. You need a way to track it all. You need a way to give everybody access.
How many here? I'll ask you this. I get this one asked a lot. At what point, it could be 0 loans, it could be 50 loans, 25 loans. How many construction loans do you think it starts to make sense to have a system? Right? If I'm trying to make a decision and pull a trigger as a mortgage company or a bank or credit union getting into this, can we start without having a platform to manage everything?
You can. I don't think it would be wise. I've done it without a platform. I've done it with the spreadsheets combined with the QuickBooks combined with the checkbook. I have done it all the ways. I've done it on other platforms. You can do it. I don't advise it.
Okay. No, that's fair. So you're of the mindset day one, have it in place, don't mess around, get the muscle memory around it, get the reporting, historic reporting tracking,
Right.
get the teams and the borrowers and the contractors through behavioral components that, hey, we're
Conditioning.
gonna
Yeah.
rinse, wash, repeat over and over and just start day one.
Otherwise, all you're doing really is setting up like a Band-Aid Rube Goldberg construction machine to get you to the end when there's already like a functioning machine that you could put in place. So you might as well start with the machine.
Yeah.
Skip the Band-Aid.
I just say just for year-end reporting, it's worth.
Yeah.
Let's talk about, hey, you get all the kinks worked out, you've relaunched. Maybe you didn't relaunch the program. You got it humming to a better tune, things are happening. Where do you start to focus to grow the program? Is it around relationships? Is it around training? What do you
Setting up for this podcast actually had me looking at numbers. And I was like, oh, we've like tripled every year. Obviously, the first year when you go from 3 to 9, it's like that's not as outstanding. But then when it's like 9 to 27, and now we're 27 to 100, like those growth numbers are just insane. First of all, to see them year over year like that, but just as you're seeing it and as you're building it out, I think my first jump was to my sales staff. That's who I wanted to talk to first. They're, the voice of your company. That's who's bringing people in. So we really have focused on building out training to our sales staff. requiring a certification of our loan officers. They go through a whole process. They have to renew that certification or keep it active with files.
Otherwise, you can't originate a construction loan. No
Otherwise, you
certification,
don't
no
get to
taco.
play. You don't get to play on my field unless you're certified. So,
I like it.
and I'm a pretty hardcore ref. Like, I set up the rules in the loan operating system. You're not going to pass go unless you have my green check mark of construction.
Oh, that's great. That's so even somebody walking in like, hey, I've been doing this for a long time. Hey, go take the test and we'll see.
Have a nice day. Yeah. And I will tell you, I've had a couple loan officers try to kind of fight me on it before. I have pushed them to my boss. And when it was kind of a funny thing, I had like a rash of loan officers being like, I don't have time. I've done these. The CEO of our company took the training. He was like, I can do it. You guys can all do it.
Eat your own dog food. I love it.
Yes.
Absolutely love it. No, that's well, what here, and for people that don't understand why, what are the implications if the CEO or your boss didn't have your back and say, hey, you gave a pass to a couple of these loans, like, hey, I've done these before, right? What happens then?
Oh, I've lived some of those implications. The message that sales can present to builders and borrowers about the whole experience can end in a lawsuit. There are terrible things that could come from promising things that can't be. So you have to have a competent sales staff. They need to know this product to make it work.
So things start to take off. You guys are tripling your business every year. You're kicking butt. You focus, marketing and sales, really starts to get the ball moving. Then what?
Then we start looking at what's beyond stick built. Churchill really focused on stick built right up front. Those first 2 years that I was here, that was kind of my main push. All my documentation, all my training, all my directive was really stick built focused. We had a couple loan officers join that had some heavy experience with manufactured construction. I had done that, the last place I was at. So I knew what I was doing getting into it. But that was kind of our next push was let's look at manufactured, let's look at modular, let's look at kit homes, barn dominiums, houses, all the
Wait, hold on. I know the barn dominium is the cool thing, but you said something that I've never heard. What's a shouse?
Have you heard of the shouse, Sean?
I know it's a house with what's the first part merged with?
A shop house.
A shop house. A shouse.
A shouse.
Is this a new thing?
I don't, what if it's like Montana vernacular and it's not even a thing?
Oh my God. If anything that I've learned in this podcast, it's the shouse.
The shouse.
Wait, spell it now so I don't get it wrong.
House. Shouse.
Shouse. Okay.
Yep.
I need to get a shirt made up that says shouse.
Yes.
Inquire within. So
yeah.
You expand the product. Modular should have been pretty easy, right? Manufactured gets a little trickier.
I love the modular and manufactured. I love all the new technology stuff that they're coming up with. We're getting lots of, hey, could we build this? And it's like, I think out of California is actually where I saw the most recent one with the walls and the insulation that are like printed or made out of all different things, and they go up in 45 days. Like, I'm here for it. I'm here for that kind of construction future.
Very cool stuff. International Builder Show is, just looking at that technology, printed homes, and once you subscribe to one of these feeds, it just fills your entire stream. Like the concrete printed homes, it's like, wow,
I love those.
Yeah, the sectional. What's the one that I see? It's like these wooden insulated, building blocks, and you got guys just, oh, here's part 32 goes right here, and the whole home's faster than the Amish putting up a home. Like it's if you could beat the Amish putting up a home, you're in a pretty good spot.
You're doing something good.
Do it cheaper and you're even better.
Right.
What's your most exciting besides the shouse and besides the barn dominium? What would you say?
I don't know.
Okay, I'll give you a pass. I'll give you a pass
Give
on
me a
that.
pass. I like it all.
Well, how do how give me an idea about the way, you kind of alluded to it and you talked about the builder relationship. Hey, they're not our borrower, but it's kind of like a realtor. It's a great referral source, an amazing partnership at the end of the day that's got to be managed a specific, uh, slightly different. How do you
Yeah,
even build them? How do you coach to build them?
the builder is definitely an important one if you're into construction lending because borrowers aren't going to build houses over and over. Builders are going to build houses over and over. Um, I really coach sales staff. We have two ways of doing things with our builders. So I give sales the option like, do you want to manage your builder or do you want me to manage your builder? I would say probably 50-50. I have loan officers that are super experienced and they manage their builders. They've just been doing it for a long time. If you're a newer loan officer in this program, we'll manage your builder that first time around, include you on all that communication so you can kind of see how we're talking, see the documents that we're discussing, and then you could take the lead next time as a loan officer. But I think the early on communications, obviously setting those expectations early with sales are kind of that's like your hook. That's getting that builder in here, getting that borrower in here. Really, it's the back of the house, the what happens during your first construction loan, not your first draw. Your first draw is never pretty. I tell people that like off the jump. It's going to be okay. We're going to get you your first draw. There's just going to be a lot more to it. After that, we will have a great time.
Low expectations. Go and
Right.
set low, and then it's all downhill from
And
there.
then we're good. Like they
Yeah.
knew going into it, this wasn't going to be fun for this first one. And honestly, I made it so it wasn't that bad. So
Yeah.
they kind of like that.
You exceeded their expectations, even though it was like getting a
Right.
root canal. Oh,
Right. Like that's really where you're reeling that in. And keeping them on that line is your draw admin with Land Gorillas, the person that they're talking to on a weekly, monthly basis, getting those things happen. But you still have, we at Churchill still have a person that is looking at all of our active construction projects. That's her job day in and day out, beyond just assisting with sending the draws. She's there assisting builders and borrowers and answering the random questions from different people. Just kind of being a backup for our draw admins too. Just here's an off hour so I can answer.
what's the secret sauce in managing that relationship? So if you're coaching me and giving me kind of a one-on-one about how I should be managing my builder relationship, how should I be thinking about that?
I really go into builder relationship management and anything I want from a builder. I really try to focus on, here I need document A from you, but in order for you to get dollar sign money. So I really try to make it like the builder's idea of here, give me this document. It's kind of like how I get my husband to take me on vacation. It's his idea. No, I want to prove my value to these builders and show them why doing this task is both good for me and them. And I think if you really show them, like, this is the reason I need this document, or this is the reason this flow occurs, they can usually make it make sense.
Mhm.
And the other thing is that you need to have flexibility. Every builder is different. So I think that's kind of one of the secret sauce pieces of Churchill is that I don't have a cookie cutter that I need a builder to fit in. I
Mhm.
say, show me the cookie that you make, builder, and I will find a way to make it work for us. I want to say like 90% of the time I can make it work for a builder's flow. And I think that's really important as a lender to make it work for the builder's business. Because if it's not, if you're requiring them to take a draw on the first of every month, but they prefer to draw on the 15th, that's not a builder that's going to want to work with you.
If you had to summarize it all up into a couple things, what are the things that make builders want to come back?
Quick draws is going to be number one. Draw turn times will always be one of the first builder asks.
Like
Um,
light years ahead of everything else. Like, hey, up here in the
yeah.
the top right sector is fast draws, and
How
then we
fast can
can.
I get my money?
How
Yeah.
fast can I get my money?
And then probably A far second is, what do you need from me to get that money? What kind of documentation am I going to have to be supplying on my end? How hard is it going to be for me to achieve what you need to release the money? So having the abilities like e-signing lien waivers and e-signing draw statements and requesting through a draw platform, those are all things that significantly reduce that draw time. So jumping back to, if you wanted to start a program without a system, you could, but it's going to just extend everything.
And it also seems like today, you got to compete with, whether it's a Langorilla system or some other system out there. Hey, your competition's doing it and they're processing, draws 2 or 3 days faster simply because of that. So plan on having some sort of disruption with your competition,
100%.
right? Okay. Oh, that makes sense. Any other advice that you'd get when it comes to, managing those relationships or best practices? You send them a
Um,
birthday card, like any other
I used to do that. We used to send not a birthday card. This was
edible
my
arrangement?
I sent them contractor pencils that were neon
Ooh,
colors that said like the program that I was doing. So that was my like, hey, thanks for working with me. Here's a t-shirt and some pencils. And
that's
all
great.
those guys love those pencils because they use them all the time. So,
We go through those things like water at
right?
conferences, like
My husband
water.
loves
It's
them too. They're
it
still like from my old company. And I always tease him like, shave that off. I'm not with
yeah.
them anymore.
What do you have best practice wise on, we talked about managing the relationship. How do you train them into why to do things? And you kind of made a reference about, well, hey, I make it their idea, or I show them what the benefit is on, hey, here's this thing you want, here's how you get it. Like how do you get them into a mindset where they're like repeating these things over and over and working for themselves to get it done?
Right. I think beyond just like the repetition of it, I think having clear directives up front of this is what you're looking at with each draw, this is what's expected of you. And really, I do think it is the reminder piece. You've got to stay in touch with these builders and borrowers. Like if you think of a loan officer closing a loan, they're done with that file. They say, congrats, have a nice day. They get their money, they're done. Construction loans are not that way. You close that loan and hang out with that person for the next 4 months to 12 months, maybe longer, depending on the build. So it really takes like a committed relationship from all parties. Like you have to be in this for the long haul.
What are some of the riskiest things about making construction loans, or what are some of the riskiest things? What keeps you up at night, when you think about it?
There is a lot of risk with construction. There's a lot of unknown. You're agreeing to lend a ton of money on something that doesn't exist yet. The things that keep me up at night are things like, how do I make sure that we're keeping track of timelines with builders? Am I making sure that the amount funded aligns with the amount of progress? How am I making sure that all of my files and all of my loan documents are still active? Just considering timelines throughout the project. A lot of I's and T's to dot and cross with construction. And I think what keeps me up are just the details, just the little things, where you'll wake up at night like, I didn't send that warranty of completion of construction, or I need that completed for this FHA.
That's
The one silly document.
what would you say, most of your time is spent on then? Where do you focus most of your time?
I I focus my time. I have a team of two awesome employees, Zach and Taylor. They are kind of my builder review and my all things during construction. So Zach and Taylor are like slaying these dragons. I get to come in at the front. I want to make sure everything's set up gorgeous. I'm looking at files before we're disclosing. I want to make sure that the scenario that the loan officer is telling me, like, here's my lot, here's my construction. I want to make sure that's what they're disclosing to the borrower. And then I get to come back in at the very end. I get the best parts of construction. I get the very beginning when everyone's really excited, and I get the very end when everyone's moving in. They might not be like as cheerful because they're just getting done constructing a home or renovating a home, and that has its challenges, but it like flips the switch when they're like, we're moving in now.
Oh, I love
Let's build the house, make it a
it.
home kind of a thing.
If you were looking at a construction loan portfolio for the first time, for whatever reason, how would you know if it's healthy or unhealthy?
Looking at a portfolio and even what the markers that I keep track of on my own portfolio are how much is funded versus how much time is left on the loan. I mean, obviously, it's not an exponential line that those go on, but for the most part, it should kind of dot progress to funding right on up.
We should be close to this line.
Right? This is not a parabola, guys. No, so that is kind of probably the biggest one I would look at is funded versus time left. And then with a grain of salt, I also like to keep in mind what those projects are. So if I've got a manufactured home that maybe has 10% funded and 2 months left, I'm not going to freak out because there's about to be a home there for the other 80% of that kind of a thing.
Very cool. Very cool.
Yeah.
This has just been an awesome conversation. Now, at the end of every podcast, we do this rapid fire section, and I think you're familiar with it. We're just shoot off a couple random questions at you and see how you do. You ready?
I like it. Let's go.
Right. Would you ever build your own home?
I would totally. I have. I didn't start fresh. I did a studs out renovation and added 800 square feet. So
why am I not surprised?
I did all the things and I'm so grateful. But I lived the experience. I did the draw experience. I did the builder needs more money than they originally thought experience. I've been there.
Yeah. If you could change one thing about your existing loan program, like, hey, if we could change this guideline or this requirement, or what would it be?
If I could change one thing, I don't think it would be about my existing program. I love my program. I love Churchill. If I could change one thing about construction lending, though, I need all the states to, even if we did them all like Texas, I just need everyone to be the same.
It's so true. It's like, oh, what did we come up state retainage requirements and how it varies in each state. It's like, oh man, now we got to dive into. You're telling me that you could only charge a maximum amount of retainage in certain states, and
you're like, no, you got to get on one page of one book. We can all do this the same.
Really good one. Well, thank you so much for being on the podcast. If somebody wanted to get a hold of you or had some questions, wanted to pick your brain, what's the best way for them to get in touch with you?
They could call or email me. I think can I say my email? Is that a thing right now?
Say whatever you want.
Dana.solberg@churchillmortgage.com. Yeah, absolutely. Reach out. I love to talk all things construction. So I can talk to you about actual loans or about the whole program. I love
Have you ever attended one of the masterminds?
Masterminds might be my favorite thing about Land Gorilla. If I had to have a favorite thing about Land Gorilla, it would be masterminds. I want to have an in-person masterminds. These are my people for real. And getting to get on a call with them on like a quarterly basis or whenever we do it, I'm there for it.
But the best would be a happy hour masterminds.
Oh my gosh, like a happy hour, and then we all share our horror stories or something.
With a confessional. Yes,
please, a construction confessional.
Dana, it's been an absolute pleasure having you on the podcast, and hope you come back and visit us soon.
Well, thank you so much for having me.
This podcast is intended for educational and informational purposes only and does not replace independent professional judgment. Land Gorilla Inc. makes no representations, warranties, or promises for and disclaims any express or implied warranties related to content. Before acting on any information, you should consider the appropriateness of the information as it pertains to your unique business needs.